Jim, we know that tons of people out there in the last several years have been through a short sale where they sold their property for less than what they owed the bank, have been through a mortgage modification where some of the principal debt has been forgiven, have simply let their house go into foreclosure where the bank, in a sense, didn't collect the loan from them. All of those people are subject to receiving a 1099 from the lender, from the bank, and some of them are getting those 1099s these days. And when the bank did a foreclosure, a loan modification, or a short sale, the consumer may owe taxes on that debt that was forgiven.
That's right. That's Section 108 of the Internal Revenue Service Code, which says there are only two exceptions to forgiveness of debt. One is insolvency, if you can show that you were insolvent on the date that the debt incurred, or number two, bankruptcy.
So we know the banks, they were overwhelmed way back in the day about getting these 1099s out, but they can do them even years later after you think it's all done and over with. There is a financial reason for the banks to do these 1099s because it creates a deduction, a loss on their books, which is good for their income taxes. But again, this passes this income tax debt on to the consumer. How many years after a foreclosure or short sale could the bank file a 1099 against somebody?
That I do not know, but it is when they feel like they can't collect it or they just write it off their books.
So a typical foreclosure or short sale, the bank has forgiven $50, $100, $150, $200, $300,000 worth of debt. That could create a huge tax liability for the former homeowner.
And that is usually a shock to people when they think, well, the bank's not going to collect this $100,000, and all of a sudden they discover that the IRS considers that they owe $100,000 tax on $100,000 worth of income.
And so receiving this 1099 by a consumer, would that be a reason in and of itself for them to potentially file bankruptcy?
Yes, along with other things, as long as you file within the taxable year, for sure you can get rid of that debt, and it will be considered discharged as far as the IRS is concerned.
Well, if I got a 1099 today in my mail, which I hope I don't, would that 1099 necessarily be for 2016, or could the 1099 be for 2015?
Well, you'll have to take a look at the 1099. They could be trying to write it off for the year 2015, or they could be trying to write it off on 2016. Usually on the 1099, it explains all of that.
Okay. So again, folks, if you have received a 1099 because you went through a mortgage foreclosure or a short sale or a mortgage modification, understand that 1099, that tax liability, can be wiped out through bankruptcy, and Jim could help you with that. And you're always welcome to call Jim at his office. Jim, tell him the phone number for you.
407-872-7447, and where the flag that should alert you is 1099-C.